Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, May 30th at about 1:45 p.m. Eastern. Well, Federal Reserve policymakers wary of cutting interest rates will likely stick to their wait-and-see stance amid fresh data today showing muted inflation last month and evidence of increased consumer caution. April's 2.1% year-over-year increase in the personal consumption expenditure price index, we call it the PCE, down 2.3% in March, puts inflation within a stone's throw of the Fed's 2% target. And actually, that's kind of a good thing. So let's go on to three charts that will give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 ETF, the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY, I forgot to do this. When I captured this chart today, the SPY was trading at $585.96, or about 58.59 on the S&P 500 itself, and about 4%, right here, about 4% below its recent all-time closing high from back here in February 19th at $612.93. So that's the all-time closing high still. The SPY back over here on the right, the SPY is now sitting just above its 20-day, that red line here, sitting just above its 20-day moving average, which is coming in at $580.46. And the 200-day, the black line, is coming in here right just below the 20-day. So the 20-day is now crossed up over the 50-day, the green line. That's a good thing. Crossed up above the 200-day. That's a good thing. So the 200-day is coming in now at 500, we'll call it 576.95. Let's just call this 577 right here. And then if we look down to the 50-day, the green line, that's coming in at 558.70. So we may round that off to 559. Now, since this April 7th low that everybody had, and this came in at $481.80. Since that April low, the SPY shot up in a very strong uptrend, as you can see here. Indeed, very steep, and the 20-day moving average helped to draw this trend line here. Very, very steep, and all the way up to these May 19th highs to 599. This gain here, from here all the way up was, I'm not drawing a straight line, am I? All the way up was a 23% run up. So that's pretty fantastic without stopping. That's a 23% gain. Now, so it makes sense that it would take a few steps sideways here. Now, we know that since back here from the all-time closing high in February, again at $612.93, we know that the SPY rolled over from there, came down to this March 13th low at about 549, rallied back up to the 200-day moving average, and tried to hold at 560, but I don't know if you can see here, it could only stay under that above the 200-day line here for one teeny-weeny little day, and then it fell back down. These moving averages have some powerful ability to hold price either down or up, depending on which side price is of it. So at any rate, it came up to the 200-day, then fell back down again. The SPY fell down, as we said, down to the April low, again at 481.80 or 482 if you want to call it. And then it did this huge bounce here. So we caught a lot of short-footed here. It bounced up to almost the 20-day moving average, up to 548 and change, then pulled back again to 508 down here, then rallied up to 595 up here, then dipped to the 200-day moving average last week, and this week we're back up at kind of tiptoed up to where we are now, again at $585.96. So we say, well, what do we make of all this? What we talked about last week was actually is very dramatic, but this did form kind of a cup with a handle, which is a bottom reversal pattern. It's a very dramatic one. And we know that if this continues to form and then price breaks above the resistance, and the 200-day is drawing the resistance for us, which it did. It went up higher, up to this 595. So it's above this support line here, because this would be where we draw the line on the cup with a handle. It is bullish, but because of this steep move up, we may see a kind of a sideways move here. I'll call it pulling into a rest stop. So we do, if it does start, but who knows, if it does start up here again, we do have resistance here at this 595, at this 595 line, and actually we can draw this line. If you want to find some more potential resistance, we can find it back here in March. And so it could have some trouble getting over this 595, 596 area. But then after that, all it has left to try to top out is the $612 and change from the all-time high, 612, 613. Now, if you can still see it, we have potential support here at the 20-day moving average, again up here at 580, and down just a ton of potential support here at 576 at the 200-day moving average, 577, and then we've got the 50-day down here again at 559. We can even use this pivot high here back on April 9th for potential support. So, and then on down. So we do have a lot of potential support here, both moving average and price support. We'll have to see how things go. For myself, if the SPY does start down a little bit below that 200-day moving average, I'm going to be keeping an eye on the 50-day moving average, which again is coming in now at about 558, 559. That's kind of where I want it to definitely stay above. And of course, there was prior price support at that same line too. So I'd like to stay at above that if it does have to, as they say these days, broaden. Okay, so again, please trade wisely and keep track of your protective stops. Our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund that closely follows our NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market, including large-cap momentum stocks like the Magnificent Seven. So today when I captured this chart, the Qs were trading at $514.54. That's just 4% below the all-time closing high on February 19th at this little candle there, at $539.52. So looking at this chart back on the hard right edge, we see that the Qs are trading above the red line, the 20-day moving average, which is coming in at 507.58, trading above the 200-day moving average, the black line, which is coming in at 495 and change, and trading above the 50-day moving average, which is coming in at $480 and change. And we can know here that just like the SPY, the run-up here from the April lows to the May highs here, to the May highs, was a 22% run-up. So that's a big darn deal. We know that since the Qs made this all-time closing high back here in February at 539.52, it rolled over. SPY did the same thing basically, and dropped to the March 13th low at 466. Then rallied up to the 200-day moving average, hit its head and couldn't get over it. And that's at 494. Then fell pretty dramatically, and on April 7th, it fell down to $402.39. Then it rallied back up on April 9th, and again, this was a lot of buyers and a lot of short covering all at one time. rallied up to 468 right here, hit its head on the 20-day moving average at 468, pulled back here to 428, then climbed again back up here to the May 19th highs at 522. Now from there, that's a closing high here, even though it rallied up a little higher, but that's the close, which is kind of important in this area of time right here. So it dropped back down to 505, then just said, nope, I'm going to keep going, and rallied back up again and kind of sidestepped to where we are now at 514.54. So we say we have potential resistance here at call it 522, 526. That's potential price resistance. And then we have, of course, on up to the prior highs back here at 539, 540. We have potential support here at the 20-day moving average. I told you before that's coming at 507. With that and this little pivot here, we have potential moving average and price support here at 505, 506, down to the 200-day at 495, down to the 50-day at 480, down to 466 at these, and so forth. So again, like the SPY, plenty of potential price support, excuse me, and moving average support should the Qs start to take a few breaths here. We did talk about last week and the week before how the Qs were overbought in the short term. We do know it was a very steep angle run up, and it's just like anything else in the world, steep run ups, at some point have to, you can't run up the stairs forever. At some point you got to stop and rest. So it would make sense here if it moves sideways for another week or two. It is still very bullish. It's still an uptrend. We may see a pause. So again, please keep your eye on your protective stops. Our final chart today is a daily chart of the iShares U.S. Pharmaceuticals ETF, the IIGE. Their IIGE has 37 holdings. The top holdings are Lilly, Johnson & Johnson, Pfizer, Merck, and Zoetis. Now, when I captured this chart today, and I'm kind of doing this because in case the market goes sideways a little bit here, this is a slightly more defensive play, but I do see interest coming into the healthcare industry. And of course, it's going to be all tied up with technology. So I just think this is a place I'd like to kind of wait out this sideways movement that the SPY and the Qs are making, some of the Magnificent Seven. I'd kind of just like to keep an eye over here on the IIGE and some of these pharmaceutical stocks to see if they're may get a little more attention here. We'll see. So when I captured this chart today, you can see down here, the IIGE was trading at $65.01. The IIGE, look back here with me, the IIGE reached an all-time high in February of 2025, this year, right up here, all-time high in February at $73. Then, like everybody else, it slipped down here to its March low, to its 200-day moving average. And look, it fell down and stopped right here on top of the 200-day, just barely below the 50-day. Of course, it fell pretty hard below the 20-day, but stopped right here. It rallied back up, and then, as most everybody else did, it fell pretty hard down to April lows. Now, what we can see here is a very shallow head with a head and shoulders pattern, and the neckline, interestingly enough, again was the 200-day moving average. When it fell below that, you go, oh no. So that the head and shoulders, of course, is a can be a top reversal pattern. Once in a long while, it can be a continuation pattern, but in this case, when it falls below the shoulder line, which in this case is the 200-day moving average, right here on this candle, you say, oh boy, here we go. And so we did. Down here, down to the April 7th lows down here, it fell down there, 259, rallied up past the 20-day, passed right up to the 50-day moving average, went straight up to the 50-day moving average. and that came in at 68.47. This high did right here, and then fell down back down here to 62 in May. Then rose up to the 20-day moving average right here, then faded a little bit back down in the last week, and then finally stepped up to the current price where it is now at $65.01. Now, again, I think pharmas are probably in a good place right here. What I'm seeing is this line right here. This is building a potential triangle here. We all know that triangles either break up or break down. So the price is still under the 50-day moving average, and I get that. And I want to wait until it shows it can do it. So in the coming week, if the IIGE can climb above the 50-day moving average, the green line, which is coming in right now at $65.43. So that's only 43 cents higher than it is at the moment, or 42. But I want it above that 50-day line. I want it to climb above the 50-day and stay above it for 3 consecutive days. Now, that's up to you if you want to get in earlier, but I want proof that it can do that. And if the market is behaving reasonably well, and IIGE goes above the 50-day for 3 days consecutively, I will buy a small position for my trading portfolio with a stop down here at 62.75, which is below this little pullback here. If and when the IIGE closes above, and say it keeps going, if it can close above, when and if it closes above $68.60, because it's got this resistance here. If it starts going up, the 200-day moving average will start coming down, but it's this price resistance here I'm watching from back in April. So if and when the IIGE closes above $68.60, I will add it to my position, and by then, of course, my stop will be a trailing stop. So you may want to keep an eye on the IIGE in the coming week. And now, please know that all of us at ToniTurner.com are happy to say we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, How to Bottom Fish Like a Pro, and that is right down here, I will show you how to detect with high probability when a stock or ETF is just about to wake up from an extended downtrend and finally take off again. You'll learn how to buy low and sell high, that's certainly my favorite, and do it over and over again. Now, our new low price for this program is only $199. You should be able to make that back pretty quickly. And by the way, some of my tradings listed here, my programs listed here, are only $59. Any one you buy, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And that's the software that I have and that I use in this program. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever popular 7 Steps to Successful Trading down to how to swing trade successfully, very, very popular program. How to trade the trend to profits, one of my favorites. How to read charts, great for novices. 3 winning setups, great for short-term traders. And again, how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.